All right, so today we're going to take a deep dive into Meta.
Okay.
And you've specifically asked, is this a good time to buy? Or should you wait for the price to drop?
Right.
Especially since Meta pays dividends.
Yeah.
Which you've mentioned is important to you. And you've also brought along an analysis from Stock Finance Pro.
Yes.
So this is going to give us a look into Meta's fair value.
Yes, it'll be very interesting. The results are quite surprising.
Oh, okay.
Yeah.
Interesting. All right, well, let's hear it. What did Stock Finance Pro have to say?
Well, they calculated an average fair value of $275.56.
Okay.
But the current market price is at $559.14.
Wow, that's more than double.
More than double, yeah.
So they're saying that it's overvalued.
On the surface, it would seem so, yeah.
Okay. Yeah, I mean, Meta, like, I know everyone's talking about the metaverse and all that, but they also, they pretty much own the social media landscape.
Right.
Like, they've got a pretty solid track record.
Yeah, they do. They do. And that's what makes this very interesting.
Yeah.
Because it's, counterintuitive to see that it would be overvalued.
Right.
However, the tool uses several different valuation methods.
Oh, okay.
And they don't all come to the same conclusion.
Okay, so it's not as straightforward as it might seem at first glance.
Yeah, not at all.
All right, so tell me about those different valuation methods.
So one that they use is the EPS valuation, which focuses on, earnings per share.
Okay, and so that's like how much profit each share represents of the company's profit.
Exactly, yeah.
Okay.
And that suggests that Meta is fairly valued, actually, with a fair value of $498.16.
Oh, okay, so that's much higher than the average.
All right.
It's also much closer to the market price.
Yes.
So does that mean then that Meta is fairly valued?
Well, it's a possibility.
Okay.
But there are other methods to consider, like the discounted cash flow model, the DCF.
Okay.
And that one takes, a more long-term approach and looks at future cash flows. And discounts them back to their present value.
Okay, I'm not going to pretend like I completely understand what that means, but...
It can be complicated.
Yeah.
But the main takeaway is that this method puts Meta's fair value at $263.71.
So that's kind of right in between, right?
Yeah, right in between those other two.
Okay.
Now, another method that they use, which might be of particular interest to you, is the Dividend Discount Model, or DDM.
Okay, yeah.
Which, as you mentioned, you're interested in dividends.
Yeah.
And this is where the analysis actually gets a bit more bearish.
Okay.
So this model looks at the value of future dividends, and that using this model, the fair value is only $171.07.
Wow, okay, that's very different.
Very different.
From the other ones.
Yeah.
So why such a big difference, do you think?
Well, each of these models uses different assumptions about, how things are going to be in the future.
Right, of course.
So like the DDM, it's focused on the dividend payouts and how they grow, whereas, the EPS valuation is looking more at the current earnings.
Okay. So it sounds like we can't just look at one of these numbers and take it as gospel.
Right.
We have to kind of understand what's behind it.
Exactly.
Now, you've also shared some detailed financials about Meta.
I have, yes.
So should we take a look at those and see if that helps us understand this a little better?
Absolutely.
Okay.
So we'll start with the revenue growth. Over the last few years, Meta has seen some pretty impressive growth.
Okay.
Even though 2022 was a bit of a down year.
Okay.
They're still a huge company. They're generating a lot of revenue.
Okay, that's good. But are they actually making money from all that revenue?
They are, yes.
Okay, good.
Their gross profit margin is 81.43%.
Okay.
And their net profit margin is 35.55%.
Wow. Okay, so they're pretty good at turning that revenue into actual profit.
Very efficient.
Yes.
Okay.
Anything else stand out to you in the financials?
Well, I would say take a look at their cash and short-term investments.
Okay.
It's a huge number, $65.4 billion.
Oh, wow. Okay.
That's a lot of financial firepower that they can use for, things like dividends, buybacks, or even, investing in growth.
Right.
New opportunities.
Okay, so that's good. A lot of cash on hand, always a good sign.
Yes, definitely.
All right. Well, speaking of the future, Stock Finance Pro doesn't just give us valuations. It also gives us something called a bull versus bear case analysis.
Yes.
So what is that exactly?
So that's looking at, different potential scenarios.
Okay.
The bull case, that's, kind of the optimistic view.
Okay.
Everything goes well.
Right.
Strong revenue growth, profits are up, all that good stuff.
Yeah. And the bear case is the opposite.
Exactly, yeah. That's the pessimistic scenario. Things don't go as well as we'd hoped.
Okay.
Maybe the revenue growth stalls, profits are down.
Yeah.
Investors get a little spooked.
Okay. So they're modeling both of those just to kind of give us a sense of the range.
Exactly, yeah, the range of outcomes.
Okay. So what does that range look like for Meta?
Well, the projections are actually pretty interesting.
Okay.
In the bull case, the share price could reach $412.80 in 5 years.
Okay.
But, on the other hand, with the bear case, it could go as low as $236.13.
Wow. Okay, so that's a pretty big swing.
Almost $200 difference.
Yeah, so predicting the future for Meta kind of sounds like it's anyone's guess.
It really highlights that, uncertainty that's inherent in any investment.
Yeah, for sure.
Especially in tech, things move so fast.
Right.
But, by considering both of these cases, we can get a more realistic picture of the potential risks and rewards.
Right, exactly, yeah. And speaking of rewards, let's not forget about those dividends. You mentioned that's important to you.
Mm-hmm.
So what's the scoop? What's going on with Meta's dividends?
Well, they're paying an annual dividend of $2 per share, which translates to a yield of 0.36%.
Okay, so not huge, but it's something. I mean, is there any potential for that to grow in the future?
There is. The tool projects a 3% dividend growth rate.
Oh, okay.
So, it's not a dividend superstar right now.
Right.
But it's possible that those payouts will steadily increase over time.
Okay. So we've got these conflicting valuations. We've got, strong financials, but also that cash position, decent dividends with the potential to grow.
Hmm.
So how do we put all of this together? What do you think? Is Meta a good buy?
Well, that's a great question, and that's what we're going to dive into next.
Whoa, back.
So we've been looking at these sort of mixed signals about Meta's fair value.
Right.
But there's a big piece of the puzzle that we haven't really talked about yet.
Okay.
The metaverse.
Right. Everyone's talking about it, but it still feels like this, futuristic concept,
It does, yeah.
But Meta's putting, billions of dollars into it.
They are, yeah.
So is it all just hype, or is there really something there?
That's the big question, isn't it?
Yeah.
It really does have the potential to be revolutionary.
Okay.
It could create entirely new ways to connect, to work, to play.
Right.
Imagine a world where you've got this seamless blend of virtual and augmented reality.
Yeah.
Where digital experiences feel just as real as the physical world.
Okay, yeah. I can see how that would be a total game changer.
It would be huge.
Yeah. Okay, so how do you actually put that into a valuation model?
Right.
It's not like we have any historical data to go on.
That's the challenge, yeah.
Yeah.
Because a lot of these traditional valuation models, like the ones that we were just talking about,
right,
they depend on historical data.
Yeah.
And looking at established markets,
right,
the metaverse, it's completely uncharted territory.
Right.
It's like, trying to predict the value of the internet back in the early 90s.
Yeah.
You can see that it has potential. But, it's all kind of guesswork at that point.
So are analysts just basically throwing darts at a board when they try to value Meta's metaverse stuff?
Well, not exactly. They are using their expertise to try and project, things like what the user adoption rates might be, how quickly the technology will advance,
okay,
and how big the market could potentially be.
Right.
But there's a huge margin of error.
Right.
Nobody really knows for sure.
Okay. And I guess that explains why even Stock Finance Pro, with all of its fancy algorithms and stuff,
yep,
gives us such a wide range for the share price.
Exactly. Yeah.
Those potential outcomes are all over the place.
They really are. Yeah.
So, if the metaverse really does take off the way that Meta is hoping it will,
right,
it could be huge for them.
Absolutely.
Their share price could go way beyond what those traditional valuation models are saying.
It could, yeah. It could be a massive growth driver for them.
Okay. But what if it doesn't? What if it's a total flop?
Right.
What if it ends up just being a really expensive experiment?
Well, in that case, those more conservative valuations might actually start to look optimistic.
Right, yeah.
It really all comes down to how much you believe in the metaverse and how well you think Meta will execute on their vision.
Okay, so it's a high-risk, high-reward situation.
Very much so, yeah.
If you're a believer in the metaverse, then maybe buying Meta now,
yeah,
even though it looks like it's overvalued.
Right.
maybe that's a way to get in early.
It could be.
But if you're not so sure, maybe it's better to just wait and see what happens.
Yeah.
Okay.
Yeah.
So it really depends on your risk tolerance and what you think about the metaverse.
Exactly. Yeah. There's no right or wrong answer here.
Right.
But it's really important to understand what the factors are.
Okay. So we've got this metaverse piece of the puzzle, but let's step back for a minute.
Okay.
And think about why else someone might be interested in buying Meta.
Right.
Besides the metaverse.
Right.
And Stock Finance Pro does lay out some key points here.
They do. Yeah.
And I guess just to be clear, these are just some of the potential reasons.
Mm-hmm.
Obviously everyone's going to have their own, reasons for wanting to invest in something.
Of course. Yeah.
So the first thing is just Meta's sheer dominance.
Yes.
I mean, they own Facebook, they own Instagram, they own WhatsApp.
Right.
I mean, these platforms are used by billions of people.
Billions, yeah.
So that's a pretty incredible reach.
It's a reach that's hard to ignore. Yeah.
Yeah.
I mean, they've built this incredibly powerful network.
Right.
And that network generates a huge amount of data.
Right. And data is valuable these days.
It's incredibly valuable, yeah.
So how does that translate into, profits for Meta?
Advertising.
Oh.
Targeted advertising.
Right.
So they use that data to deliver very specific ads to users.
Right.
Which makes them, a very attractive platform for advertisers.
Okay, so they're using that network effect.
Yes.
To just basically bring in tons of advertising revenue.
Exactly. Yeah. It's a brilliant business model, really.
Yeah.
And it's what has fueled their growth for years now.
Okay. So it's not just about their size, though.
No.
Another reason that people might be interested in Meta is their commitment to innovation.
Right.
They're not just sitting back and milking their existing platforms.
No, they're not.
They're always trying new things.
They are, yeah.
Right.
Always coming up with new features.
Yeah.
Experimenting.
Reels.
Reels, yeah.
Marketplace.
Marketplace.
And obviously the metaverse.
Right. The big one. But I mean, that constant innovation it's really key to staying relevant.
Yeah.
Especially in the tech world where things are moving so quickly. They
Okay.
have to keep their users engaged.
Yeah.
They got to attract new audiences and find new ways to make money.
Right. And speak of making money, we were talking about their financials earlier.
Right.
They have, consistent revenue growth, healthy profit margins,
Yes.
and a ton of cash on hand.
They do. Yeah.
So, I mean, that's got to count for something, right?
It absolutely does. Yeah. I mean, that kind of financial strength, it gives them a lot of flexibility.
Right.
They can invest in new opportunities like the metaverse
Right.
without putting themselves in a risky financial situation. They can buy back shares, which can boost their earnings per share.
Right.
And potentially increase the share price. And of course, they can reward their sharebholders with dividends,
Right.
which is something that you're interested in.
Yeah, exactly.
Yeah.
So it's not just about the metaverse.
No.
They've got, multiple ways that they can create value for their investors.
Exactly. Yeah. And that's an important thing to keep in mind. Even if you're not totally sold on the metaverse, there are other reasons to be, optimistic about Meta's future.
Okay. So we've highlighted some good reasons why someone might want to buy Meta.
Yes.
But like with any investment, there's always potential downsides.
Right.
Right.
Always.
So what are some of the red flags that investors should be thinking about?
Well, one of the biggest challenges that Meta faces is just the competition.
Okay.
I mean, they're not the only game in town anymore.
Right. I mean, it seems like there's a new social media app popping up every day.
There really does, yeah.
Yeah. So how's Meta doing against all these competitors?
Well, they're putting up a good fight.
Okay.
But the competition is definitely having an impact on their growth, especially among younger users.
Okay, so if they can't, attract and keep those younger users, what does that mean for them?
Well, it could hurt their long-term growth.
Okay.
For
yeah.
sure.
Yeah.
And it could also make it harder for them to, charge as much for advertising.
Right.
Because advertisers, they want to reach those younger demographics.
Right.
So if Meta starts losing ground, it could affect their profits.
Okay. So competition is definitely something to watch out for.
Yes, definitely.
What else should investors be keeping in mind?
Well, regulatory scrutiny is another big one.
Okay.
Governments all over the world are starting to get concerned about the power and the influence of these big tech companies.
Ah.
And Meta is definitely, in the spotlight.
Yeah, we've seen a lot of headlines about, data privacy and antitrust investigations and people calling for more regulation.
Absolutely.
So
yeah.
how could that impact Meta?
Well, I mean, it could lead to big fines.
Okay.
It could restrict how they collect data.
Right.
And it could even potentially force them to change their business model.
Okay.
And it's really hard to predict how this is all going to play out.
Right.
Which, adds another layer of risk for investors.
So it's not just about running their business well.
No.
They also have to navigate this whole, regulatory environment.
Absolutely. Yeah, it's a complex landscape.
Okay. And then of course there's the question of user engagement.
Right.
Especially on Facebook.
Yeah.
It kind of seems like Facebook isn't as popular as it used to be.
Yeah, I think that's fair to say.
Especially with younger people.
Yeah, it seems like they're moving to other platforms.
Right. Is Facebook becoming like the social media platform for older folks?
I mean, it's possible.
Yeah.
Younger users they're going to, platforms like TikTok and Instagram, which are more visual.
Right.
More fast-paced.
Right.
And Facebook is, it's starting to feel a little bit dated.
Yeah.
And it can be really hard to change that perception.
Right.
Once people have, kind of moved on, it's tough to win them back.
Yeah, even if you add new features and stuff.
Yeah, exactly.
Okay.
Yeah.
And then there's those big investments that they're making in the metaverse.
Right.
I mean, we talked about, the potential upside there.
Mm-hmm.
But we should also talk about the potential downside.
Of course, yeah.
Right.
I mean, they're spending billions of dollars.
Yeah.
On this project.
Right.
And right now it's actually hurting their profitability.
Oh, okay.
If you look at their recent earnings reports, their profits have gone down because they're putting so much money into this.
Okay. So, I mean, are they just hoping that that'll turn around eventually?
Well, I think they're taking a long-term view.
Okay.
It's a big bet.
Right.
And it's going to take time for those investments to hopefully, pay off.
Right.
And to start generating revenue.
So it's kind of a waiting game for investors.
It is, yeah.
They have to decide, do they believe in this vision?
Mm-hmm.
And are they willing to be patient?
Right.
While Meta, figures this all out.
Exactly. Yeah, and that's what makes this whole analysis so interesting. You've got, these traditional valuation models that are saying, hey, maybe Meta's overvalued.
Mm-hmm.
But then you've got this wild card of the metaverse.
Right.
That could either totally justify the current price.
Yeah.
Or make it look like a bargain in a few years.
Right. Yeah. So we kind of have this puzzle.
Yeah.
But we're missing some of the pieces.
A few pieces are missing, yeah.
Yeah. So what do we do? Where do we go from here? What's the final verdict on Meta?
Well, if you're looking for, a simple buy, sell, or hold recommendation, you're not going to get it from me.
Why not?
Because I don't think it would be responsible.
Okay.
I mean, the decision of whether to invest in Meta it's a personal one. It depends on, your goals, your risk tolerance, and your own assessment of Meta's future.
Right. So this whole deep dive is just to give people information.
Yeah, to help them make a more informed decision.
Right. Not to tell them what to do.
Exactly. Yeah. Don't just blindly follow someone else's advice.
Okay. So do your own research.
Absolutely, yeah.
Look into the financials.
Yeah.
Read different analyst reports. And really think about where you think Meta is going.
Exactly, yeah. Form your own opinion.
And don't forget about those dividends.
Right.
I mean, Meta is a dividend-paying stock.
It is, yeah.
Which, could be good if you're looking for some income from your investments.
Absolutely, yeah.
Wow.
If you're looking for that steady income stream. Those dividends can be a factor in your decision.
Okay.
Yeah.
But obviously, with any investment, got to weigh the potential rewards against the risks.
Always, yeah. Always.
So we've covered a lot here.
We have, yeah.
We've looked at Meta's financials, their growth prospects, the risks, the potential. So where do we go from here?
Well, I think one of the most important things to really think about is Meta's future growth rate.
Okay.
I mean, Stock Finance Pro, they use different growth assumptions in their models.
Right.
But you need to decide what growth rate you think is realistic.
Right. Yeah. Like, are you bullish on the metaverse?
Right.
Do you think it's going to drive like massive growth for them?
Mm-hmm.
Or are you more skeptical?
Yeah.
And I guess how you answer that question is going to really affect how you value the company.
Absolutely. It will. Yeah.
Okay. And obviously don't forget all those other things that we talked about.
Right.
The competition, regulatory scrutiny, user engagement.
Yes.
And Meta's ability to like actually execute on their plans.
Exactly. It all plays a role.
So our deep dive into Meta is almost over.
Almost there. Yeah.
We've explored their financials, we've looked at their growth, the risks, the potential.
Mm-hmm.
Now it's up to you to make the call.
Right.
Is Meta a buy, a sell, or a hold for you?
That's the question.
So we've covered a lot in our deep dive into Meta.
Mm-hmm.
We've looked at their financials, their move into the metaverse,
mm-hmm.
The competition they're facing.
Right.
But before you make that decision about whether to buy, sell, or hold, there's one more thing I think we should talk about.
Yeah, I agree.
The Stock Finance Pro tool itself.
Right.
What are its strengths and weaknesses?
Exactly.
Because, you are relying on this information to make this decision. Yeah. So I think it's important to take a step back and really think about the tool itself.
Yeah, for sure. I mean, it's easy to get caught up in all the numbers and projections.
Right. Yeah.
But no tool is perfect. Right. So let's take a look at Stock Finance Pro. Yeah. What's good about it? What are some of its limitations?
Okay. So what would you say are some of its strengths?
Well, I think one of the biggest strengths is that it uses a variety of valuation methods.
Right.
So as we saw, it doesn't just give you one fair value estimate.
Right. It gives you a range.
Yeah.
Based on all these different methods.
Exactly. Yeah. And I think that's helpful because as we discussed, different methods can give you very different results.
Right.
So, I mean, just seeing that range, it helps you to understand, how much uncertainty there is.
Yeah. Yeah, exactly. It makes you realize that, like, you can't just take one number and assume that's the truth.
Absolutely. Yeah.
Okay.
And it forces you to think about, what are the assumptions behind each of these models?
Right.
And to really consider, both the potential upside and the downside.
Yeah. Okay, so that's good. I also think the tool is pretty user-friendly.
It is. Yeah.
Like, it does a good job of taking, really complex financial information.
Mm-hmm.
And presenting it in a way that's easy to understand.
Yeah, it's very accessible.
Yeah, for sure. Okay, but let's not get too carried away here.
Right.
What about some of the limitations of the tool?
Well, I think it's important to remember that Stock Finance Pro, like any valuation tool, it relies on making assumptions about the future.
Right.
And those assumptions might not always be right.
Right. Yeah. And especially, like, we've been talking about how unpredictable the tech industry can be.
Yes.
Especially, with Meta and this big bet they're making on the metaverse.
Exactly. Yeah.
Like, those growth projections, I mean, they could be way off.
It could be, yeah.
Who knows?
Yeah. Who knows?
So, I mean, it's good to have those projections as like a starting point. Mm-hmm. But you really have to do your own research.
Absolutely.
And come to your own conclusions.
Yeah, think for yourself.
Yeah. Okay. Another thing is that Stocks Finance Pro, it doesn't capture everything.
Right. Right. It can't.
I mean, it's focused on quantitative data.
Yeah.
Financials, valuations. But there are also these, like, qualitative factors.
Right.
That are important, too.
That can be harder to measure.
Right. Exactly. So like, what are some examples of those?
Well, things like brand reputation.
Mm-hmm.
How is the management team? How are they doing? Right. What's the competitive landscape like? What are the regulatory risks? I mean, these are all things that can be really hard to quantify, to put a number on. Right. But they can have a huge impact on a company's performance.
Right. Yeah. So Stock Finance Pro is a good place to start.
It is, yeah.
But it's not the end of the story.
No, it's not the whole picture.
Yeah. You still got to do your research.
For sure.
You got to think critically.
Absolutely.
Okay. So as we wrap up this deep dive into Meta, what are, like, your final thoughts?
Well, I think my main advice would be, don't panic.
Okay.
Take a deep breath.
Yeah.
Investing can be very emotional,
Yeah.
especially when we're talking about a company like Meta.
Yeah.
It's in the headlines all the time. There's always something going on.
Yeah.
But you have to try to detach yourself from the hype and really just focus on the facts.
Yeah. Don't let your emotions get the best of you.
Exactly.
Whether it's like excitement or fear.
Right.
Just make a rational decision.
Yeah, make a decision that's right for you.
Yeah. Okay.
Based on your own goals and your own risk tolerance.
Right. So use the information that we've talked about. Use the insights from Stock Finance Pro. Do your own research.
Absolutely.
And really just form your own opinion about Meta.
Exactly. Yeah.
And remember, this is just the beginning.
It is. Yeah.
You've got to keep learning.
Keep exploring.
Yeah. Stay informed about what's happening in the industry, what's happening with the regulations.
Absolutely.
And just keep learning.
Yeah. The more you know, the better decisions you'll be able to make.
Yeah, for sure. And the thing is that investing it's constantly changing.
Right.
So you got to stay curious, you got to stay engaged.
Always learning.
Yeah. And always be willing to question your own assumptions.
Exactly. Yeah, because things change.
Yeah, absolutely. All right, well that brings us to the end of our deep dives into Meta.
It does.
Hopefully you found it helpful.
Yeah, we hope so.
And good luck with your investing.
Yes, happy investing everyone.